Hello, my name is Mark D'Souza, founder and CEO of D'Souza Credit Services, and in honoree of Blackout Week, I will be presenting our credit repair and credit education program that we offer. Credit is so important in our industry and in our lives in achieving the goals that we want to achieve. And as the great Michelle Obama said, success isn't about how much money you make. It's it's about the difference you make in people's lives. And at D'Souza Credit Services, that is the number one factor and the number one goal that each one of our credit certified consultants stress every call, every point of communication with any consumer. Our agenda today and topics that I'll be speaking on will be an overview of credit, who we are, what services we offer, why credit repair is needed, and then our contact information. What is a FICO score? Lenders use your FICO score to determine a consumer's risk and the determination of extending credit to you and what is the likelihood of you actually paying back that potential debt. Please note that FICO stands for the Fair Isaac Corporation, which is a data analytics company that's based in San Jose, California, and it focuses on credit scoring services. It was founded by Bill Fair and Earl Isaac in 1956. It's a FICO score that measures a consumer's risk and has become the fixture in consumer lending in the United States. Furthermore, credit monitoring services provide consumers with estimated credit scores, not the actual FICO score that is used by the banks and lenders in our industry. Unless your credit report and credit score state FICO, it's not your actual FICO score, to note. What is the range of the FICO score? Your FICO score ranges from 300 to 850. 300 being the worst, 850 being the highest, and then with between 650 and 750 being in between. Ideally, the credit score that one wants to have to get the best possible interest rates that are available out there, you want to have a credit score possibly 700 or higher. 700 or higher is the ideal situation where you want to have. That will provide you with the best interest rates in regards to possibly a mortgage, an auto loan, a student loan, credit card, charge card. You're going to get the better offers and better rates with a credit score of 700 or higher. If you have a credit score between 300 and 560 or 650, which is considered very bad and bad, you will receive higher interest credit cards, possible denials for credit, and you will have higher monthly payments on your debt that you would be approved for. So it is very, very important to maintain a very high credit score. What are the 5 key components in calculating your FICO score? 35% of your credit score is based on your payment history. If you pay your bills on time and you make at least the minimum payment, you will receive that 35% that is shown. If you do not make your payments on time and you accumulate late payments or additional delinquencies and derogatories on your credit file, your credit scores will decrease an estimated 90 to 110 points, possibly more on each additional occasion. So that it is very important to maintain a good payment history overall to receive the highest credit score as possible. Very importantly, in regards to delinquencies, please note that a late payment, a collection, a charge-off, a bankruptcy, a judgment, a tax lien, a repossession, a foreclosure, medical bill, a utility bill, those items possibly can stay on your credit profile if not challenged or disputed for up to 7 to 10 years. So it is very, very important to be very responsible and not bring any delinquencies onto your profile. Next, the second most important factor that goes into calculating your credit score, it is credit utilization. 30% of your credit score is based on how much credit is given to you from a lender versus how much credit you're using. Ideally, you want to make sure that your credit usage is somewhere between 10 to 15% at the most at the ending of your statement, when your statement closes. So not when your due date of your bill, but when the statement closes. Because when your statement closes, the balance that's listed on the statement, that's the balance that's reported to the credit bureaus every month. And the lower that balance is over time, the higher your FICO score will be. Very important to note, you, the consumer, control your balances on your credit cards. When one first obtains a credit card, you have a zero balance, which means you're able to maintain and choose what that total outstanding amount will be at the ending of the billing cycle. The same does not go for when you obtain a vehicle loan, a mortgage, a line of credit, a personal loan. When you obtain these services and you already have drawn on them, you will eventually pay them down over time. But with a credit card, you have full control and access of the balance. So it is very, very important to note, keep the balances 15% or lower to see the most significant increase in your credit score. Number three, the third most important factor that goes into calculating your credit score is credit age. The credit age is the length of time you keep your credit cards open. So you keep your accounts open for 5, 10, 15, 20 years, which is what a lender and a bank, financial institution would like to see is your payment history over time. You are going to get that 15% over time consistently. However, please note, credit cards stay open unless you close them, you lose them, or you don't use them, because they will close if you don't use them over time. Now, the difference comes is on a mortgage, an auto loan, a student loan, a personal loan. When you pay off any form of loan, once it is paid off, there is no impact to the credit age. Why? Because the account is closed, and the FICO scoring model is based on accounts that are open in good standings. So 15% of your credit score, importantly, is based on credit age, and credit cards helps you to obtain that significantly. Number four, 10% of your credit score is based on different types of credit. So the FICO scoring model company organization would like a consumer to have different forms of credit outstanding, such as a credit card, a charge card, an auto loan, personal loan, a mortgage. They want to see different forms of credit on your profile. And if you have that, you will obtain that full 10%. If you do not, you will receive some of that 10%. And last but not least, number five is inquiries. There are two forms of inquiries to note. There are soft inquiries and there are hard inquiries. Soft inquiries do not impact a consumer's credit profile, meaning your credit score does not decrease and it does not appear on the profile. A soft inquiry consists of when a consumer pulls he or she's own credit profile. So, example, if you were to go and pull a copy of your credit report on Experian.com, Equifax.com, TransUnion.com, or any one of a third-party site to obtain a copy of your credit score, it would not appear on your credit history as a credit pull, as a hard inquiry, and there would not be any decrease in the score. On the contrary, however, if you have a mortgage company, a credit card company, a utility company, an auto loan company, anyone pulling your credit, obtaining a copy of your credit with your authorization, that will decrease the credit score, and it will decrease at an estimated 1 to 3 points, and it can possibly stay there for up to 24 months, which is 2 years, if not challenged or disputed, and that is considered a hard inquiry. So I just gave you a full conclusion of the 5 key factors that sums up and calculates your credit score, your FICO score, on a monthly basis. Credit monitoring. What exactly is credit monitoring? Credit monitoring is a service that is provided by all 3 credit reporting agencies, Experian, Equifax, and TransUnion, along with other third-party sites and services that allows a consumer to access their credit score and their credit report to analyze any data that's reporting and to confirm and verify what is valid and what is not valid. Please note that a consumer accessing their credit profile from Experian, Equifax, or TransUnion directly will obtain their actual score from the bureau there. However, when obtaining your credit score from a third-party service, you will be provided with an estimated credit score. It will not be your actual FICO score. Please note that current statistics as of June 2020, and this data is directly coming from Experian, and Experian was able to accumulate this data utilized from different banks, credit card companies, different institutions. They were able to obtain this based off of the data there. And based off of that data, as we can see on the chart here, 67% of Americans do have a good FICO score, which is good. However, and that consists of 670 or higher. Please note, however, there are 16% that have a very poor FICO score, which ranges from 300 to 579. And then you also have a fair credit score from 580 to 669. So the ultimate goal is to have a credit score, ideally of good, between 670 and 739 or higher, to receive the best interest rates on a mortgage, on an auto purchase, on a personal loan, a business loan, student loan. That essentially, the higher the credit score, the lower the interest rates. So on credit cards, in addition there as well, a credit card, you will receive the best rates and the best offers with a high credit score versus one that has a very poor credit score. Who are we? D'Souza Credit Services' ultimate mission is to enhance and to solidify our customers with the best credit solution to achieve their financial goals. D'Souza Credit Services provides expertise and data on credit and how to maintain an excellent FICO credit score. In addition, D'Souza Credit Services founder and CEO is a highly FICO certified member and has over 20 years of experience in credit education, credit repair, and finance. Our services and programs. At D'Souza Credit Services, we offer 4 different services and 3 different programs. Our number one service that we offer is our credit education, and that is one which entails we offer essential tools, tips, information, and data up to date, current, on how to use credit, how to maintain it, and how to build on it over time. Number 2, we offer credit repair. Any consumer that comes to us that has any inaccurate information, anything that's unverified, unvalidated, paid, unpaid, identity theft items, we will work with the consumer to assist them cohesively with disputing, challenging that information with all 3 credit reporting agencies, Experian, Equifax, and TransUnion, along with any creditor or collection agency. Number 3, we provide FICO score improvements with our credit repair. So constantly, as our credit repair team, processing team is consistently working on getting your profile corrected and updated, your FICO score also is improving at that same time. Our goal is to make sure all of our clients achieve the highest FICO score as possible at the completion of all of our programs. And last but not least, in regards to credit card and financial goals, our goal is to help you maintain, open any credit cards, to build your credit, and to help you achieve your ultimate financial goals, whether that is to buy a home, to buy a car, to get a loan, to get a credit card, whatever it is, it's our ultimate goal to help you get there. Well, what kind of programs can we provide, or what kind of programs do we provide in regards to credit repair to assist you to achieve the highest FICO score as possible in your actual ultimate financial goals? Our first program we offer is our minor. The minor program consists of disputing for you 1 to 10 accounts, which will include medical collections, utility collections, and any hard inquiries. We will dispute and challenge for you 1 to 10 different accounts as per the program requires. Our second program that we offer is our moderate program, which consists of 11 to 20 different accounts, which consist of collections, charged off credit cards, or potentially late payments. The moderate program consists of disputing, challenging with all three agencies as well, and the collection agencies and creditors to get any inaccurate, unverified, unvalidated information off your profile. Our major program consists of our more larger, extensive files and clients that have more, additional significant information reporting inaccurately. That consists of disputing and challenging at more than 20 accounts or more, which will consist of bankruptcies, judgments, tax liens, repossessions, foreclosures, or any identity theft items. Please note, importantly, it is very important to note, all of our programs are month to month. You are not locked into any long-term agreement with the Sousa Credit Services. And so importantly, all consumers, all customers that are enrolled in any one of our programs do not pay for credit monitoring services. Why is credit repair needed? For the majority of us that have never seen our credit report or even reviewed it before, or even know how to obtain it or analyze it, it is so important why credit repair is needed. In recent studies that were done, and these are from governmental agencies, the Federal Trade Commission and the Consumer Financial Protection Board, the recent study that was done by the FTC, the Federal Trade Commission, shows back in 2012, and then there was a follow-up study that was done in regards to that data that was compiled in 2012 and 2015, showed that there's an estimated 70% of Americans that have errors on their credit report. Now listen to that. 70% of Americans have some form of error on their credit report that possibly are impacting them from either trying to purchase a home, get a car, possibly get a loan, whatever it may be. They're being impacted by that. In addition to that as well, the effect of it now is they're possibly paying a lot higher interest rates than they should be. Second, per a study done by the CFPB, which is the Consumer Financial Protection Board, their study that was done in 2015 and 2016 showed there was 882,000 complaints that was filed with the CFPB. Listen to that for a second. And of that, 95% of the complaints involved in the three were, it involved the three credit reporting agencies, Experian, Equifax, and TransUnion. Furthermore, with our current situation that's going on in our country right now, with the pandemic that's going on and how it is affecting everyday life and business as well, think about if we had this issue already previously with the inaccurate reporting previously, what impact COVID-19 is now going to have on a consumer's credit profile and inaccurate reporting. So these are three viable and logical reasons of why credit repair is needed. Does credit repair work? And that answer is yes. At D'Souza Credit Services, we have and we will continue to assist consumers with getting inaccurate information deleted from their credit report with our due diligent and strategic process. At D'Souza Credit Services, we currently have been successful with getting an estimated 78% of inaccurate information deleted from a consumer's credit report. Some of those items that we have been successful with getting removed are bankruptcies, judgments, tax liens, charge-offs, collections, foreclosures, repossessions, late payments, medical bills, utility bills, hard inquiries, and incorrect personal information. D'Souza Credit Services continues to be a key component on assisting a significant number of consumers to help them purchase a home, get an auto, obtain a credit, loan, line of credit, rent an apartment, and much more.